friends, it's your girl Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that's something that you've been looking for, then you are in the right place at the right time. Now, whether you've been here before or this is your first time on my channel, I do just want to give you guys a warm welcome and just wish peace and profits to everybody. Because if you're here, you want to learn and you want to make money. I've been doing this for about 4 years, and I really just am sharing the different tips and tricks that have helped me over the last 4 years, over the course of my journey. Some I still use, some I don't anymore, but you never know what's going to click for somebody else. So in today's quick video, I'm going to be showing you one of my greatest or one of the greatest best kept secrets on Tradingview, and this is the indicator templates. Now, this is going to help somebody who is still struggling to find indicators that work for them, or if you don't quite know where to start, Tradingview has really done the work for you by putting together a really cool list of indicator combinations that are pre-built into your chart. Now, you're going to want to start by going to tradingview.com. This is the website that I use for all of my charting and analysis. And you want to look for this box here. Now, this, of course, is going to be after you've chosen the thing that you want to trade. In this example, we're going to be looking at USD CAD on the weekly. Now, once you click this box, you're going to notice at the bottom it says default templates. And TradingView has all of these templates with different indicators that you can put directly onto your chart with settings and everything. And all you have to do is look for your confirmations. So today we're going to start with the Displaced EMA strategy. And the reason why I want to use this one is because now with TradingView's basic plan, you can have up to 2 free indicators. And that's perfect because this strategy only uses 2 indicators. Now, the indicators on this strategy are the EMA and also the volume bars. Now, how you use this strategy is very, very simple. If you're going to be looking for a buy, I'm going to give you guys the things that I look for a buy if I were to use this strategy. And then I'm going to give you the confirmations to look for if you're going for a sell. Now, the market can be going 3 ways, right? It can be going one of 3 ways. It'll either be going down, which we can see demonstrated here. There was a huge downtrend. It could be going up, which we see was happening for a couple of weeks here. Or the market will be doing something called consolidating, which means it's moving sideways. It's not particularly going up or down. So when the range happens, the market has to have a breakout either on the downside, meaning it wants to continue to sell, or it'll eventually have a breakout on the upside, meaning that it wants to buy. Now, what the EMA or exponential moving average is telling us the average place of price over a certain period of time. And in this case, if we look at the EMA settings, we can see that the length is 20, meaning that this line is going to be the average place of price over the last 20 days. Now, this is really nice to know because when the candles are closing below the EMA, it's letting you know that price is closing below average and the market probably wants to sell. In this case, the EMA is acting as a level of resistance, and every time the candles get close, they're being pushed back down. Now, what happens when the market goes from a downtrend and into consolidation? Once you see, and this is what you want to look for on this strategy, once you see that the candles have started to push up, right, or cross and close above the EMA, and you also see a green volume bar, that's when you're going to want to go ahead and enter the trade. Now, if you were being taken an aggressive entry, you could get in right now. No, if you were taking a conservative entry, you could get in right now on the current candle, or you can wait until the very next candle opens to see if it truly closes above the EMA, letting us know that price wants to push higher. So what you want to look for, and those buying confirmations are the cross and close above the EMA and a green volume bar. Now let's see what happens. Okay, and we can see on the very next candle, this is where the buying trend really picked up momentum. And then you even see a very tall volume bar at the bottom. Now, with the volume bars, the higher it is, the stronger the volume is, and the more likelihood that the market is going to go in that direction. So now that we know how to identify a buy, it's pretty much the same thing with the sell, but backwards. If you notice that the market is in an uptrend, and then you see that the market is consolidating, which we can see here, there was a break of structure to the downside. We can see on this candle, right? And I want you guys to drop a 7 in the chat if you can see this. We can see on this candle, it crossed and closed below the EMA. And now the EMA again is acting as resistance. In addition to that, we can also see once we had the close, and we can get a vertical line for this, we can see once the candle crossed and closed, we also had a red volume bar. So what you're really looking for is alignment. If you're looking for a buy, you want to see the cross and close upwards with a strong volume bar. And if you're looking for a sell, you want to see the cross and close downwards, and you want to see a strong red volume bar. If the candles are falling below the EMA, then the EMA will act as resistance, and you can set your stop loss right above the EMA. If the candles are buying and pushing up, the EMA will act as a support, and you can typically set your stop loss right below the EMA. So I really hope that this video was helpful, especially if you're new to Tradingview and you haven't quite upgraded to paying for indicators, or you don't know which indicators to use. This is a simple strategy. It's very straightforward, and I highly recommend that you guys try it out. So if you try this strategy, let me know below in the comments, and make sure that you subscribe for more content. But that's really all I have for y'all today. Until next time.